Hello, everyone. A very warm welcome. My name is George Radford. I'll be the host for today's webinar, and I'm delighted to be your host today for this webinar, where I will be providing an update on the UK property market. And this webinar is specifically focused for our Kenya-based clients, investors based in Kenya, looking to buy property in the United Kingdom. But the content will be relevant to any international investor, of course. So just by way of background, I'm the Managing Director for the RPA Group for the UK and for Africa. I'm a chartered surveyor by trade with over 20 years of property investment experience, and I specialise in assisting international clients invest in international markets, with a particular focus currently on the United Kingdom property market and also Germany. Today's presentation will very much focus on the UK market. We're going to have a quick look back at the performance of last year. We're going to have a look at the outlook for the UK property market for this year, for 2024, and then we can have a look at more specifically, areas that are currently offering very compelling returns. And we'll do a Q&A. You will note there is a box where you can write your questions. Please do send them in, and I will endeavour to answer all of them at the end of the webinar. So in terms of the RPA Group, just a quick bit of background on the business. We are a global business. We have a global footprint, and we specialise in assisting international clients wherever they are in the world to invest into the UK property market. And how we do that, quite simply, is by providing an end-to-end investment solution. So at the forefront is obviously research and due diligence, making sure that we work with the best developers in market and that the product is located in the right place to give the best returns to our clients. We will then undertake investment advice for the client. So understanding clients' needs, their investment goals, and aligning that with the most suitable property investment to meet their investment requirements. Once that's done, we then obviously facilitate the whole buying process. So from the point of instructing the solicitors, completing the legal paperwork. Clients are looking to finance the investment, then we can facilitate the mortgage process as well, which are available to international investors and Kenya-based investors. And then at the back end, we've got our lettings and management service. So we will manage clients' properties directly and provide that lettings and management solution, so collecting the rent and paying that into your bank account. And then when you wish to resell the property, again, we are here to help you to liquidate that asset back into the secondary market. Okay, so let's have a look at what happened last year in the UK market. So definitely 2023 was a more challenging year for the world, I think it's fair to say. Inflation was spiralling out of control. Central banks were raising their base rates quite considerably. Oil prices were going up significantly, and that had obviously a massive impact on mortgage interest rates. So that was really the primary impactor, I suppose, on global property markets. However, the UK market remained very resilient. Prices overall fell by 1.1%, but within those figures there, there are a number of places that really outperform, which we'll have a look at as the presentation goes on. So what really underpinned the strength of the UK market was a very, very strong labour market. So wage inflation, was very healthy. That was one of the primary reasons, actually, that the UK Bank of England was so slow in stopping increasing the base rate to curb the inflation rate, because the job market was so strong. But what we have seen now is that the base rate is very much stabilised. lending rates are starting to come down, which is great to see. And I think a lot of the stress testing that was put in, post the global financial crisis, meant that people weren't borrowing as much, people weren't borrowing irresponsibly, banks weren't lending irresponsibly, and that led to the UK market, really weathering the storm of last year. The rental market, in contrast, just given the supply constraints on property side, the rental market was incredibly strong, and we saw rental increases of 9% plus across the country, and it was the best ever year for the UK rental market, which is obviously a very positive stat. We specialise in new build properties, off-plan new build developments, and just a note here really on how the new build market outperformed the wider UK market. The average price of a UK property currently is around £285,000, but the new build market, the average price now is £425,000, and we're seeing the new build property market significantly outperform the older stock in the UK market. Okay, so that's last year. Looking forward now, so quite big swings really in terms of the outlook for the market. If we go back just to October last year as an example, Knight Frank, they had a negative forecast for this year of 4%, and in January they revised that to plus 3%, so a swing of 7%, which is obviously quite significant. And that's largely driven by the fact that base rate is stabilised, inflation's dropped off now below 6%, and there's a huge amount of confidence in the market. So let's have a quick look at the growth figures for the coming year. So the outlook for 2024. It's positive. We're seeing increases, excuse me, across the board. UK average increase over the next 5 years, 18%, and across the Northwest, 21.5%. Same for the West Midlands, and London, 17% over the next 5 years in terms of capital growth increases. So there's some significant growth there. You probably noticed London lagging a bit behind the Northwest and the West Midlands. As examples, that's probably because London, it's a more expensive market, is coming from a lower base, but it is worth noting that there's still a significant buying opportunity in London, and prime central London is still 17% less than it was in 2015. So albeit maybe the outlook is not quite as strong as some of the regions in terms of capital growth forecast, it's a very strong argument to say that there is significant value in London property currently. The start of the year, in terms of activity, we've seen asking prices rise by 1.3%, 20% more sales agreed in January, 15% more properties on the market, and the most amount of mortgage products we've seen in 15 years. Okay, so just having a closer look again at the market growth. So house prices, covered most of this already, but just to recap, positive growth across the country, depending on where you're looking, anywhere from sort of 16 up to 20, 21, 22%. And the rental market, the outlook for the next 5 years, 22, 23%. And I suppose it's worth noting that, albeit the capital growth figures in London maybe are not as strong as some of the regions, the rental market in London is incredibly strong. The outlook, 30% growth in London over the next 5 years. Just draw your attention down here. The UK needs 300,000 new homes a year to keep pace with the housing demand. We have a housing crisis still in the United Kingdom. We're at least 100,000 units short per year in terms of the supply meeting demand. And that really is what underpins the strength of the UK property market and will continue to underpin the strength of the UK property market. Just want to have a look at some rental figures. So from Brick Management and Lettings, our partner. So if we look at the Manchester market, you can see average yield 6.7%, 5-year rental forecast from Savills 21.5%. Birmingham average yields 5.37%, so less the yields overall in Birmingham than Manchester. Outlook pretty much exactly the same. And then London 4.7% rental yields, and the 5-year growth forecast 17.4%. So what we saw last year, as mentioned earlier, was the highest level of rental growth in history, and 8-9% across the country, depending on what figures you're reading. Across our portfolio, it was more like 13%, which is fantastic for our investors, obviously. And we expect that trend to continue moving forward. So it's a great time to be a landlord. Maybe slightly higher interest rates aside, it's a great time to be a landlord, just because of the supply and demand imbalance and that significant demand for rental properties, which will continue to drive up rental values in the medium to long term. I did a webinar a couple of weeks ago on Birmingham, so just a summary on that, and then we can delve in a bit more into Manchester and London for the purpose of today's webinar, just so I'm not repeating myself. So what we looked at a couple of weeks ago in Birmingham was the market was remarkably resilient. So we saw in an earlier slide the UK market as a whole, negative growth of 1.1%. Birmingham, however, outperformed, and we saw growth, depending on what figures you're reading, between 1 to 4% growth over last year. So it outperformed. According to Land Registry, new build prices further outperformed the wider market in Birmingham, 6.7% growth in the new build property prices last year. And the Birmingham outlook for this year and the next 4 years, so over the next 4 to 5 years, 21.5%. So Birmingham, for those maybe who are not so akin with the UK market, it's the second biggest city in the United Kingdom. It's got one of the biggest retail centres in the country, and it's got an absolutely booming economy, fantastic universities, and it's one of the best places to be investing in property currently. I want to have a bit more of a focus today on Manchester and London, as mentioned. So I want to look firstly at Manchester and look at some key figures. So let's have a look at the population. I'm just going to go through these stats because I think they're rather interesting and compelling. So current population of Manchester, 551,000, 552,000, and it's projected to grow by 56,000 by 2034. So over 10% increase in the population. That's obviously fantastic for the property market. And 45% of the population is under 35. We know that young cities are great for investment. You've got a fantastic labour market, and Manchester has one of the best retentions of students that then go on obviously to work and to fuel the local economy. So those figures are actually incredibly important. Over 100,000 students there, 27,000 international students. So it's a massive, massive hub for students and international students, Manchester. Huge Chinatown there as well, obviously. Average rental yields, we looked at those earlier, 6.7%. The economy, 32% economic growth over the last decade. That's significant, especially given some of the challenges we've had with COVID, so on and so forth. And that's more than any other city in the United Kingdom. It's the largest UK financial centre outside of London. So a lot of banks, financial houses, so on and so forth, have their regional headquarters in Manchester, outside of London. And there's over 85% of FTSE 100 companies have an office in Manchester. Voted the UK's most livable city in 2022 and accounts for 2.7% of the UK GDP. So Manchester, one of the most significant cities in the United Kingdom, without a doubt. Fantastic football teams. I'm a Man United fan, unfortunately for me. But just bear that figure in mind, please, as we go through to the next part of the presentation. So 2.7% UK, 2.7% of UK GDP contribution for Manchester. And then we'll compare that to London in a minute. So in terms of house pricing, and that's what we're here to talk about, 2.5% increase in 2024, forecasted by Jones Lang LaSalle. and 21.5%, as we saw earlier, forecasted by Savills between now and 2028. So really, really positive outlook. Home ownership rate, 37% of Mancunians own their own properties. That's really important, to fuel a healthy market. You don't want it to be, predominantly investor driven. Rents set to increase by 4% this year, so nice healthy increase. I would expect to see more than that, but let's see. And 21.5% growth in rental values between now and 20. Infrastructure, we know infrastructure is so important in terms of driving an economy and driving property prices. Better a place is in terms of infrastructure, the easier it is to get to, the better a place it is to work. And obviously, that means more people are going to live there. So what's happening? Huge regeneration project, £4 billion regeneration project in Victoria North, which is a JV with Far East Consortium and Manchester City Council. So Far East Consortium being one of our development partners. We'll have a look at some of their products a bit later on. And also the expansion, major point to note there, the expansion of Manchester Airport, 1.3 billion. So Manchester's third biggest airport outside of London. So obviously Heathrow, Gatwick, Manchester. So, it's a very significant airport. And then a huge shortage of homes, 170,000 new homes needed by 2030. Okay, let's have a look at the London market now and try and compare and contrast. So population, London 8.9 million, 552,000 wasn't it in Birmingham, in Manchester. So significantly bigger, and that is set to grow by 9.8 million by 2043. So 10.1% increase, very similar to Manchester, but that's over the next 2 decades instead of the next decade. 23% of the current population under 35. So London is an older city than Manchester, which is quite interesting. And 400,000 students. Manchester's got 100,000 students. So 4 times the student population and 127,000 international students compared to, I think it was 27,000 international students in Manchester. So again, interesting figures. This is where I asked earlier just to remember the GDP growth figures, contribution figures, sorry, for Manchester for the UK. So Manchester contributes 2.7% of the UK GDP, London 22%. So almost 10 times more than Manchester, which is very interesting, isn't it? We know that London is, the insurance capital of the world, and it's just overtaken New York as the #1 financial centre in the world, which is a great accolade for the city. And obviously, it's the wealthiest city in terms of GDP in Europe. In terms of house prices, 1.8% growth forecast for this year, 17.5%. We've looked at those figures earlier. 46.8% home ownership, almost 50% home ownership rate in London. That's actually very interesting, significantly higher than Manchester and a lot of other cities I may add. Again, that's really important for investment. It creates a very healthy environment for investment. Rents forecast, we've been over the rent forecast, I don't want to touch on that again. Don't want to talk about the sewer infrastructure either, but the 2 sort of major points here, I suppose, Heathrow expansion, looking to get the 3rd runway, controversially, but it will come eventually, no doubt, because it's required. And then Crossrail 2, that's already completed. And then obviously HS2, which is under construction, linking the north. Sorry, a bit of a typo there. I should say, well, effectively is Crossrail 2, but HS2, Crossrail's already completed, Elizabeth line's in place. But HS2 will link the north to the south, so it's not going up to Manchester anymore. Unfortunately, it is going to Birmingham, and it's going to reduce the journey time from London to Birmingham from about an hour and a half down to about 45 minutes. Huge shortage of homes, 625,000 home shortage in London between now and 2039. So it's that 15 years. We do have a housing crisis in the United Kingdom. and that again is great for investors, not so good for local owner occupiers. Okay, so what I'd like to do now, have a quick look at the RPA product portfolio, and then do a quick summary at the end, and then do a bit of a Q&A session. So in terms of the RPA products, I'm not going to go through these one by one, but we have a wide range of products. We have suitable products for all investors. Our minimum requirements are £100,000 typically of equity requirement from investors, and then obviously you can take financing on top. If you have that in place, then we have a product typically for anyone. So we've got opportunities, new opportunity here in Birmingham, a couple of fantastic opportunities in Manchester, in Gainsborough, in Lincolnshire, another fantastic development, waterside development there. That would be our lowest price point, sort of £150,000 in terms of purchase price. Prime Central London in Canary Wharf, fantastic development with Far East Consortium. Barratt Homes development there, the Goldfinch Apartments in Hendon Waterside, northwest London. Sneaked in a bit of Berlin here, so we've got a fantastic new Berlin development, and we also have a very compelling opportunity down in Brighton with King's Crescent Homes. So this list is not exhaustive. We have a whole host of additional products, but that just gives you a flavour of some of the investment opportunities that we have for our investors. It's all well and good showing CGIs and projects that are off plan and being built. Completions are everything, and here we've got Scholars Quarter in Birmingham. I was there yesterday. 100 apartments, 1 and 2 bed units. You can see it's coming very close to completion now. Some photographs of the show apartment from yesterday. It looks great. It's wonderful seeing it all come together. This investment was launched about a year and a half ago, 2 years ago, and it's just coming to completion now. So very much looking forward to our clients finally doing the completions and getting the keys to their apartments, and of course for us to then rent them out. So in closing, I just wanted to show this slide. Why invest in UK property? Long-term stability, long-term growth really is key, obviously for Kenyan-based investors, for African-based investors, for any investors based, I suppose, in emerging markets. The UK offers stability in your portfolio. It offers currency protection. It offers economic, political stability, albeit that's not often the case currently in the House of Commons, but in the main, it does. And I think this is a very interesting, some very interesting stats here, just showing the growth returns over the last 70 years. So you can see the UK property market has outperformed Dow Jones, Nikkei, cash in UK bank accounts, gold, and the FTSE. So that is no small feat. And what it shows is if you buy well, you buy UK property. It's an essential part of a well-balanced portfolio anyway, but if you buy it well, hold it long term, it will deliver very, very strong returns on investment and give you very, very strong hard currency income, see in GBP. So in conclusion, what do these figures tell us? So mentioned the UK is a safe and steady arena to invest in. And now we believe is a very opportune time to do so. Reason being is last year was a bit more challenging for the market. There was a lot of pessimistic activity, and there was a lot of pessimism overall in terms of people's view, even on the ground here in the United Kingdom where I am. That has very much changed in the last few months. Everyone is very, very positive. We're seeing positive capital growth values across the country instead of negative growth values like we saw last year. And the next 4 or 5 years are offering very, very strong returns. Developers are getting more and more confident. And what that will mean inevitably is obviously prices will go up significantly. So the RPA group firmly believe we've got a very nice window of opportunity, probably over the next 6, maybe 12 months, to buy well into the UK property market, hold it for 5, 7, 10 years, generate very strong return on your investment. Also, buying off plan offers significant benefits in terms of mortgage rates. Kenyan-based investors currently probably looking at mortgage rates of around 7%, 7.5% maybe. Obviously, it all depends on the individual. British passport would considerably help, but for your Kenyan-based investor, Kenyan passport earning Kenyan shillings, probably between 7 to 8% is the rate that I would be looking at. But that will come down significantly over the next 12, 24 months as the Bank of England continues to reduce their base rate down from 5.25%. And as mentioned, the supply and demand fundamentals of the UK market, they're not going to change. There's very little being built, really, in terms of what is required. And for the next 10, 20 years, personally, I don't see that imbalance changing. The housing crisis will remain. And as long as that does, the UK will continue to be a safe and secure and compelling place to invest in property for international clients. So buying UK property is all well and good. Sounds very compelling. Why should you do it with the RPA group? We specialize in helping international clients. We understand the challenges of buying from abroad. I personally specialize in assisting African-based clients, across the continent, purchasing into the UK market. We've got a fantastic track record, 4.8 stars out of 5 on Trustpilot. We've handled transactions of over 1.3 billion pounds on behalf of our investors. Global footprint, offices, across 4 continents. And we provide that end-to-end solution. And I think it's a great accolade for our business that 65% of our clients buy more than one property with us. So that concludes my presentation. I hope you found it useful. There's a few questions that have come in. I think I've answered one of them already, from Rana in Kenya. Can I get a mortgage for a UK property earning Kenyan shillings? Yes, you can. Of course, it's a bit more challenging, but we can assist you with that. Who will manage my property? John and Mombasa. We will manage the property. Sorry, I think I clarified that. We will manage the property for you on a day-to-day basis, secure the tenant, collect the rent, and then pay that into your nominated bank account. Those are probably the most relevant ones. Mindful of time, I was trying to keep the webinar fairly concise, within half an hour. I think I've done that. Should you wish to book a one-to-one meeting, you can scan that QR code there, or more traditionally, you can send us an email, info@therpagroup.llc.com, or speak to your relevant RPA advisor. I'll be in Nairobi coming months, and I look forward to seeing a lot of customers that we have there, and of course, new prospects who are interested to find out more about the RPA group, the services we provide, and the fantastic products that we offer for our clients. Thank you very much for your time. Take care, have a good day, and we look forward to hearing from you.